All right, folks, back to work. Hope you guys had a fantastic day. We got non-farm payrolls coming out tomorrow morning. You know we're going to get some good volatility, some fireworks off that big news report. More importantly, though, we have this huge range right now on the hourly charts on the S&P and the Nasdaq. Now, ranges, they like to rotate from top to bottom, right? Like a pendulum swing. And that rotation is tipping us off to where we have what I think are some really nice, easy winning trades setting up tomorrow. So if we play our cards right, we can use that rotation to buy and sell tomorrow. I'm going to cover all my favorite trades as always in tonight's video. I want to make sure everyone has a roadmap to make some money on non-farm Friday. So charts are ready to go here. I'm glad to have you back with me here tonight. Enough of the intro. Let's go find some more winning trades on non-farm Friday. I have two very important clues on the charts in front of us right now. One of those big clues is right here on the 60-minute, these hourly charts. You'll notice that beautiful range we see right now on the hourly on the S&P and SPY, that range here on the hourly, the Nasdaq, triple Qs. Ranges are very simple. They like to rotate back and forth, right? Up and down. They rotate back and forth. Now, you'll notice where we are right now. We're right around the low of that range on the hourly chart. That's one really, really big clue for tomorrow. But I'll tell you this, one even more important clue, wait till you see the faster time frame, the tick charts, because the range on the tick charts is backwards. It's opposite. It's an expanding triangle range on the tick chart. And that might be the biggest clue to help us time some easy entries, some easy winners on non-farm Friday. So we're going to grab that tick chart, that faster time frame in a moment. Before we do that, though, and dive into entries for tomorrow, let's talk schedule, because tomorrow is a Friday. It's not your average Friday. Tomorrow is the first Friday of the brand new year, the brand new month. Tomorrow's non-farm Friday. Now, most important, we do expect some fireworks around that non-farm payroll number tomorrow morning. So please be careful early in this session tomorrow. But remember, tomorrow's a Friday. Fridays, you may not be aware of this, but Fridays, they love to run in the afternoon. So my kind of goal on a Friday morning is to get in as early as I can when I'm at my best and making good decisions. But I always like to leave a little piece as a runner on a Friday afternoon, because Fridays, they love to pick a direction and then run all the way to the close. So two things I'm watching for tomorrow. Again, that employment number is certainly the most important information. But again, get in early, leave that runner. Fridays love to run. Keep that on your radar for tomorrow. Let's get back to our charts though, because I mentioned earlier that there's one bigger clue on some tick charts here. It's good to know when the news is, but the money is made on the charts. Let's now drill down to some tick charts right now and talk about the opposite triangle, right? Or the opposite range. Look at this range we're seeing right now. Now, first of all, if you're watching for the first time right now, that is a tick chart right there, a 7,000 tick chart. All the time frames are in the upper left-hand corner. And that yellow line right there, that is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week. Look at this range we're seeing right now, this expanding triangle, expanding range. You might call this a megaphone. Look at that rotation, that beautiful rotation. So if rotation holds up for tomorrow, we should be heading back down to the low of that range and then rotating back higher. There could be a great bear trap waiting down there to squeeze back up and finish off that rotation going higher. But wait a second though. What if they don't? What if we don't get that rotation? What if they go higher instead? Oh boy, now we have a failed rotation. And that is a really, really big clue, because that means the bears have failed and it gives the buyers a ton of opportunity. We'll talk about if we get this thing going higher, because that can be tricky, but with the right game plan, it can be very lucrative as we go higher for some short trades and maybe a big breakout pullback above that range. But let's talk about some bear traps as we go lower first, because as we go lower here, we expect this thing to want to rotate back higher again. This is a horrible spot to be selling down here. So one of my favorite trades for tomorrow is a simple bear trap here. As we go lower, I'm not going to pick a bottom. I'm not going to blindly buy that bottom because it may keep going lower. What I'll do is I'm going to look for the bears to come in, try once, go higher, try twice. Now, the most aggressive entry on this is to think about where the stops are, right? Where the sellers place their stops and buy right into those stop losses. This is the more aggressive way to do it because we are pretty bearish here over the past couple of days. We're kind of a bearish overall market right now. So that is an option, but that is definitely the most aggressive option. The better trade, I think, what I'd love to get for tomorrow is I would love to get, and if you're in my free video classes right now, we call these bear traps, right? It's a technical trap pattern. What I'd like to do is get a nice green candle signal, take a first profit target, a quick first target, remove the risk on that trade before we get going up too high. That way protect myself against kind of a little fake out going higher there. So one of my favorite trades here for tomorrow is a bear trap off that low. The best entry is to get that higher high in price and get right in below that prior swing low right there. The more aggressive entry is to buy it as it breaks above that high. And we know where the market wants to go. It wants to rotate back up other side of that range. And I will talk about how to short this thing back down again a bit later on in the video. A second bear trap looking for is we may go lower and we may not get 1, 2 and back up again. We simply may not get something like that. Look over here, right? We may not get those bears to try once, twice, and squeeze back up. We oftentimes get like a V bottom, right? It'll whoop and go right back up again. If that happens, look what happened over here. Look what happens when a market V bottoms off the low. It pops up, it begins to grind going higher, and see what happens? You can mark a trend line off those highs, you can bring it down off that low. In my trade room, we call this the first test is the best test. So a second bear trap I like to look for down here, if we roll lower and we don't get a chance to trap the bears in and it whoop runs back up again, I don't want to chase after it because it kills my risk reward ratio, right? I don't want to buy up here now because now my risk is so large, it just kills the risk reward ratio. The better way to do this is if it V bottoms, it begins to grind going higher like this, just go over here, right? Draw a trend line off those highs, bring it down off that low, and my favorite trade is to always look left, find one of these prior swing lows, and get, again, the first test. Ideally, I want to buy right below that swing low. I'll use a pattern entry we call a bear trap. I'll use a seller failure pattern. I teach all this stuff, of course, inside our free video class. So a V bottom is a second type of bear trap I'm watching. And then one other variation of a bear trap is a little more complicated. For example, sometimes we make a real strong run down, we'll get a quick pop up and a retest of that low. Now, in my trade room over the years, this is oftentimes the most lucrative trade we get because in these situations, think about what's happening right now. Anybody who sells on that pullback, where's their profit target? It's down around that low. So does it make sense that anybody who sells up here, they become buyers, right? They buy their way out of that short trade down there. So a lot of buyers are going to be sitting right around the low of that move. These retest trades are oftentimes the biggest winners because it squeezes everybody. It fools all the rookies chasing it lower. Now, to time the entry on this, I can be a lot more aggressive on this retest trade. What I mean by that is I don't need that technical bear trap. If I start seeing rookie bears come in, trying once, go higher, trying twice, I can again think about where their stops are and I can use their stops to fuel that move running higher. Now watch closely here. I like to string together what's called a failure into a bear trap combination. Now watch closely here. This will start to separate away from that moving average, give you a higher high in price, that swing low right there. Guys, if you want to make more money, add to your winning trades. I call these failure into trap combinations, it's simply 2 tries for the bears and then add to your winner or jump back in on that higher high in price and want that nice strong green candle signaling back above that moving average and leave that runner. I'll tell you, these double bottoms, these retest trades, again, are oftentimes our biggest winners in our trade room. Now, tomorrow's Non-Farm Friday. We may go lower. We may get a big move down. I do want to talk about that in just a moment. Before we do that though, let's slow down for a second or two because I know we've covered a lot so far, and I know most folks watching right now, you know these patterns already. You're making money with traps and failures already, but if you're here for the first time right now, this might be a brand new language. What the heck am I talking about? Traps, failures, retest trades. Don't you worry. I teach the entire roadmap, the entire system I'm talking about. I cover all this. In fact, I have 100 examples of traps and failures. I cover so much more of this in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up right there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells me exactly where the winning trades are going to be each day. More importantly, I want to teach you my favorite entry patterns so you can time better entries and make a lot more consistent money. Guys, bottom line, the markets are way too good right now not to be making weekly profits. So if you're tired of missing the best entries right now, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it's 100% free. Most people start making money on their own, all from that free video course, the stuff I share in that free video class. Also be aware too, guys, I'm going to put all the important links you'll need to learn more of the stuff. I'll put it all in the description of the YouTube video. Definitely start first with the free video class. I'll put those links down there for you. And don't forget too, the place to be every morning is in our trade room. 8 o'clock Eastern time. We trade together every morning. I'm going to put all the important links you'll need for that, the description of the video. And keep in mind, if you're on Twitter or X as they call it these days, I post a ton of charts and videos and mindset stuff on Twitter X. Give me a follow. Again, all the details you'll need to learn more about this stuff and hopefully help you earn a lot more are linked up in the description of the YouTube video. So where did we leave off? I talked about 3 different types of bear traps going lower. But what if I'm wrong? What if I'm wrong? Again, non-farm payrolls tomorrow. What if we rock lower and begin to grind going lower? Now, write this down. Anytime a market pops and grinds, it'll pop and grind away from that moving average. It's probably going to pull back and retest that low before we make that run back up again. So if this thing gets crushed after that news and begins to grind and grind and grind going lower, my game plan is going to be this. I'm going to mark a trend line off those lows. I'm going to pin that trend line up around those big highs up there. I'm going to look left, find some prior swings. Now watch closely. I'm going to look for what's called a two-legged pullback. It'll hopefully be around the underbelly of that trading range for a breakout pullback ultimately. Now, that will give me the general idea of where I want to pull the trigger on the short. Now, this may rip going higher, right? I don't have a crystal ball. What I do know though is if I can catch some of these buyers chasing after it once, twice, I'd love to use that 2-try failure pattern, trap those bulls in, and slam this thing back down to retest that low. Now think about this. If I can get that short, where's my target? It's back to retest that low. So once again, sellers who sell short right here, they become buyers at that low. You tell me, is that a good place to sell short now? Of course not. It's the worst place you can think of to sell short because you're now at a big time area of support. Professional traders are now getting out of their positions. You're picking up their leftovers. So if that's a horrible spot to be a seller, it's a great place for a bear trap. Grab that pullback to the moving average. Let those bears try twice. Remember, anytime we try to run stops, it's always a higher high in price because as the market goes higher, more sellers enter the market. I want to trap in those bears. Think about where their stops are, or as I say, think about where their pain is and buy right into their pain. Those double bottom retests Again, in my trade room, these are some of the best trades that we get. And remember, on these double bottom retests, I love to string together what I call a failure pattern like this into a trap combination. Remember, whenever we look for a trap, the first thing is a bit of separation off the moving average, right? Look over here, right? As they separate, right? They pop up, shallow pullback, going higher. See how it separates off that moving average? That is what leads to good bear traps. So over here now, as we pop up off of that low, watch that higher high in price, get that separation, get right below that prior swing. Nice strong green candle closing convincingly above that 21 EMA, and we're in. Adding to our winners is the easiest way to make more money. So if I'm wrong about the bear trap off the low of that range and this thing gets crushed running lower here, remember, if it begins to grind going lower, anytime it pops and grinds, the odds are very, very high. We pull up, we retest that low, then we get that rotation back up again. Boy, I'm getting goosebumps just thinking about this stuff right now. So that's the game plan and some variations as we go lower. Now, let's kick this up a couple more notches, because if we don't go lower and we go higher, boy, does that open up a can of worms for the buyers tomorrow morning. Let's go to the Nasdaq right now. Nasdaq's getting a bit lonely over here. You can tell right now. If you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and share this video link with other trading buddies, because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days. I appreciate you all spending a few minutes with me every evening here on these YouTube videos. So thank you so much for all the likes, subscribes, all the ongoing support. Now, let's get back to business and talk about the Nasdaq. Nasdaq is very, very similar. Look at that trading range we're seeing here right now on the Nasdaq, rotating back and forth, right? We're down around the low of that range. A lot of key areas of support down below us. I'll tell you, it's very difficult unless, now remember, tomorrow's non-farm Friday. Anything's possible. We may see a big shot going lower, and if we do, you know my game plan for that. We talked about that a moment ago on the S&P. But you take away a big shot lower, and we should be trying to rotate back above the low of that trading range. The real clue, though, is over here in the tick charts. Again, a 4,000 tick chart. Upper left-hand corner there in the same 21 EMA. Look at this beautiful rotation back and forth. Now, rotation is a word that every trader needs to learn, right? Look at the beautiful rotation back and forth. This is important, right? Because as we go lower, we should now be looking for ways to trade this now rotating back up and then back down again. Where things get really interesting, though, obviously, is if we don't get that rotation lower, if it runs higher now we have a bit of a problem. That is a very bullish clue here. So now going higher here right now, remember, we're still pretty bearish, right? This is a pretty bearish market right now here in the medium and the long term right now. So as we go higher, how would I sell back here? Well, first of all, notice that pendulum swing, the amount below, the amount above. That gives me a real key level to look at. The triangle level, of course, overhead, prior swing, right? All these levels up overhead are really good areas of resistance. If we make a run going higher here, I have to be aware of that failed rotation. It's a very big bullish clue. So in a lot of cases, I'll get aggressive on these and try once, twice, and sell right below that low. Again, it's going to use that same two-try failure pattern we love so much in our trade room. And of course, I teach the basics of that inside our free video course. But the reality is, in this scenario, that trade is pretty aggressive now because of the failed rotation. In this scenario, if we go higher here, I'm going to look for the buyers trying once, trying twice. But now I really want to wait for lower low, get right above that high, get that strong, in this case, red candle, closing firmly below that moving average. It's a bit more of a selective trade because it's basically a technical bull trap. And again, you'll learn bull traps in that free video course. I mentioned earlier, lower low in price, right above that high, strong red candle. That's your signal going lower. And remember, I love to string together these two try setups along with, now where's the market want to go now, right? It wants to rotate, right? It wants to rotate back to the other side of that range. So how do I short this thing as it's going lower? I want to sell as high as I can. And to do that, it will be another variation of, in this case, of a bull trap. It's a lower low in price. And remember, the real kind of giveaway here is the separation off the moving average, right? If I see this thing dump off the high and begin to grind down like that, remember, grinding markets are really strong. Separation off the moving average equals strength. Separation equals strength. When I get that lower low in price, I'm going to mark that high, get above that high right there, strong red candle. That's your signal to finish off the move. If you look closely, this is the same exact pattern. They're both bull traps. One is more of a reversal bull trap. The second one here is more of a continuation bull trap. Some people have a hard time learning one or the other. They're both the same pattern, right? So one is more obvious as it rotates going lower. We run our way down, bears once, bears twice, bear trap, back up again, and we trade that rotation. Now, as always, we may not get that bull trap pattern off of that high. We may run up, and again, we're pretty bearish here over the past few days. We may not get that bull trap. It may get whacked right back down, and if it takes a V top off that high and begins to grind going lower, you know this by now, right? Hopefully you know this by now. What do? We mark off that low, we find that channel above that high, then we look left, we find prior swings. Remember, the best entries on these are almost always going to be above a prior swing. And see how this is the first touch of that channel? First test is the best test. And in all reality, this could be any of the entry patterns you guys are learning in the free video course. Bull traps, buyer failure patterns come to mind. A lot of examples of those in that free video series. So a V top reversal could easily be a bull trap short off the high. And remember, we very frequently see a strong pop up. It pulls back, retests that high, and now once again, is that a good place to be a buyer? Not in an overall bear move like this. No, it's not. So in that case, same idea, right? Same idea. 1, 2, don't go picking tops and bottoms. I don't have a crystal ball. It may keep on going higher. There's no indicator that I can use that will accurately and consistently give me a top. It just doesn't exist. I've been doing this almost 20 years now, and I've yet to find any indicator that consistently can call tops and bottoms. I learned the hard way many years ago. Let it retest. Let these buyers try a couple times, because think about this. If you're caught long up there, and you get stopped out, what happens? You sell your way out. In these scenarios, everyone becomes a seller. Why? Because anybody who buys down here, they're taking their profit. They're selling their way up there, right? So buyers become sellers in both profit taking and in stop losses. And again, remember, I love to string together those two try entry patterns along with those, remember that separation, right? The key is get that separation off the moving average. Get that lower low in price, and don't miss that little pullback above that prior swing high. Leave that runner, right? Promise me you'll leave those runners and let those trades run. Now, one final note for tomorrow. Tomorrow's non-farm payroll. What if we blast up and keep going? Now, you know this pattern by now. Hopefully you know this pattern. We've covered this 3 times now in this video. If it pops up, right? And again, it may pop up. We start pulling back, buyers once, buyers twice, right? That's a sign of reversal, okay? But if we pop up and we start grinding, what do grinding markets do, right? They love to pull back and retest the high, pull back and retest the high. So this becomes pretty easy now. Mark off that high, mark off that low. Again, I like to go looking left, find one of these prior swings that lines up right around the low of that channel. Mwah! That is a gorgeous setup, and oftentimes one of the easiest trades you'll find in really any market that you want to apply to. This could really be a good little pullback there for the buyers here. And then we'll see what happens, right? They may run back to that high. They may get stuffed at that high, once, twice, back down again, or oftentimes, now pay attention, on a pop and grind move like this, very important, the size of the pop, right? That pop leg, that spike leg, okay? Breakout spikes, okay, are measuring spikes. So the size of that spike up, this news spike, right? It might spike up and then grind higher here. The size of that spike leg is a measuring leg. Why is it important? Well, because now, once I know how deep that pullback is right now, remember, if you want to make more money, get better at holding on to your winners. Okay, so anytime I see a pop and a grind like that, pay attention to how big that grind leg is, pin it right off that low. And again, tomorrow's a Friday, so leave that runner. All right, guys. Boy, I'm excited for non-farm Fridays. We've covered a lot in this video so far. Any questions, hit me up in the comment section below. But guys, that's the plan for tomorrow's non-farm session. Now, speaking of tomorrow, the place to be is in our trade room, 8 o'clock Eastern time. I'm going to put all the important links because the easiest way to start making money in these markets is come out and learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to get started down in the description of the YouTube video. Start first with the free video course. Everyone loves the trade examples in there. Again, most folks start making money on their own, strictly with that free video course. So enjoy those trade examples. Then come join me in the trade room and we'll do it together every morning at the opening bell. In the meantime, be well out there, be nice to each other, and be here next time. And also, guys, thank you so much for reaching out. I'm in Los Angeles. The sun just came out here in Los Angeles. The winds are dying down. Luckily, me and my family, we're fine here in Los Angeles, but it's a very sad and scary situation here in LA right now. I appreciate everyone reaching out and thinking about me the last couple of days, but it seems like we're turning the corner right now, and we're just all praying this fire gets under control here sooner rather than later. Not a good situation for a lot of people here in Los Angeles. But thank you all for thinking of me over the past couple of days here. I am distracted. Things are scary here, but we're definitely doing just fine here at the SOT headquarters in Los Angeles. In the meantime, guys, be well out there. Be nice to each other. Stay safe this weekend, and we'll see you guys same time, same place next time. Adios, amigos. Bye for now.